Hi, welcome to Market Alert for Friday, the 28th of February. Okay, let's go for it. Worst things in my career. US stocks suffer fastest collapse from record high since Great Depression. And yesterday, wow, what a day. The market, we'll start off with the intraday. If you just have a look at this, from here up to here was 700 points. And from the top down to the close, around the close, was 1,200 points. It was carnage. The market is in free fall, as I said in my notes, and it's still in free fall on the overnight. The volatility yesterday, I've never seen anything like it. In the 2-minute chart, for example, was trading 100 point swings in a matter of 2 minutes. That's how volatile it was, and it continues to show this overnight once more. 25,071. I mean, remember we were heading for 30,000, and then the market has just cratered and moved lower. As always said, it's the staircase up, it's the elevator down, and that's what's going on here. The 200 MA is looking like an area of support in the weekly chart at the moment, as prices continue to move lower. 24,601, that will be more or less 5,000 points off in a matter of a week. The monthly chart, not a lot's happened. It's quite amazing when you actually look at the insanity, as I have done weeks ago in the Market Alert, about the 23,000 points that have been put on by this market since March of 2009, and how prices have moved to the upside for the last 12 years or more. You can see this huge move, 23,000 points. Not even got back to the December lows yet. Will we? I don't know, but certainly at the moment the market is continuing to move to the downside. However, it's only going to need the Fed, who are absent at the moment, the plunge protection team. I think the mouse is melted with trying to stop the fall. But all it's going to take is a cut in interest rates to bring a temporary relief to this market and a temporary rally to the upside. And that's what apparently Trump is begging for from the Fed to do. I can tell you this now, 0.5% interest rate cut, a 1% rate cut is not going to make any difference. This is a market that's been inflated for years. I've spoken about it, I wrote about it, and the only way eventually this market is going to go is back to fair value, where it should be. And that fair value is 20,000 points lower than where it is. All we've done is inflate the debt bubble. Doubled it in the last 12 years. It's hundreds of trillions globally, and what follows a stock market crash is a property crash as well. So be warned. That's likely to be on the cards if this continues to the downside. But certainly at the moment, it can't get itself off the lows. It keeps trying, and it's just dragged lower every single rally that has happened intraday. Just show you this, would move the chart over, you'll see continues to fall, rally, fall, and continue to fall. So even at the moment where you've got the buying coming in, this is just profit taking by the shorts. They can't believe the look that they've made the money, and then down she goes once more. And this is what we're seeing happening on the overnight already. I mean, blimey, look, if you get 100 points overnight, 200 is bad. But overnight already, we are down 675 points there. So it's going to be interesting to say the least. What news have we got? Well, it's not worth even looking at, is it? Let's face it. There isn't any news out this week anyway, but just as a bit of a jest there, have a look, see what is out, because it isn't going to make any difference. It's just going to continue to move to the downside. Implied volatility. Well, we've got a bit of a move on this one now. We're looking for 13 to 26. We're through this. So be warned, the options are seriously overvalued, and I mean the put options, which can create a bounce. Only a temporary one, as I've just spoken about. So today, even though things look bad going south to start with, they could quite easily turn around and you'll see a rally back because of the implied volatility. So keep this in mind. Here you can see in the color-coded one, I haven't rescaled this one just to show you how dramatic this rise is in the market at the moment. Just out of interest, let's just have a look at the all-time high in the 2008 crash. Let me just grab that for. Okay, so here we go. We're at 72 for the 2008 crash. At the moment we're halfway there, 34. Again, big spike though, very big spike, and we've surpassed the December 18 and also the other corrections that we had in 2010 and 2011. So very interesting. Well, not so much 2011, but certainly 2010. So we could see a bit of a bounce, even though it's dire at the moment on the intraday. And this is, again, one of those things where a lot of intraday traders will get caught. And by not looking at the background, it could quite easily turn around and start doing this. It might only take a word from the Fed, but I've seen this before. Saw it in July 16, December 18, when a call was made to all central banks to start buying. So the key is the implied volatility. No doubts about that when you get the extremes. Oh, it's the wrong chart. Yield curve remains inverted. No surprise there. So yeah, when you see this, you can expect a bit of a reprieve in the market. Only a temporary one, but you can expect it. If we go back to here, you can see as well where we started off at these sort of levels, 34, and then they came back, and then the big event turned up. So again, do expect some sort of a reprieve as well. They won't continue just to crash, but who knows? Ultimately, I'm just looking at patterns that have repeated in history before. Okay, that will do for this one. Let's see what happens today. Only time will tell, as they say, but it's going to be an interesting one. Okay, that will do it for this one. I will keep you posted of events if there's anything major, but it's an interesting day, to say the least. And with that, thanks for watching. See you in the next.